Okay, good afternoon traders. Welcome to Trade Setup in the live stream for the 9th of March. Hope we're all doing well today, having a good day. Hope you enjoyed yourself in the last couple of days in the markets. Haven't done that much, to be honest. Opened down the last couple of sessions, but you haven't really gone on with it, which is interesting. Washed out a bit of a level today, which we'll talk about in a minute. So, yeah, not a big mover in the US at all either. Over the last couple of sessions, they've been pushed down, but they've really been just sort of towards the close, whereas previously, any sort of move down during the session has been brought up into the close. So, interesting times at the moment. We've got US payrolls, which are coming out this Friday, so tomorrow night at 12:30, which are going to be a big one out of the US. So, just beware. Just watch out what happens on that overnight. So, coming into Monday morning, we might have a bit of action, but we'll just see how that plays out. So yeah, definitely I think definitely a rate rise is probably on the cards for later on this or sometime this month anyway. Data's been good out of the US, so we'll have a look at that in a second. How are we all today anyway? For anyone that's new, we'll just go over the usual housekeeping stuff. Top left-hand corner you can see of the screen is our trade setup with Twitter. On Facebook on the top right-hand corner, you can join us on Facebook or just subscribe to us on YouTube. And we've been doing a few videos lately. We've been out of action on those, apart from the streams on the other videos, the last probably week or two, couple of weeks, just getting a lot more organised. So just trying to fine-tune a few things. So just keep an eye out on that. We will put you through the alerts through the app anyway when there's a new video that pops up. So keep an eye on that. The general advice, just remembering we only give general advice, we don't give specific advice. Anyone that's new, any questions or anything we answer, that's we're really just based around our own opinions and what we view, in the markets or each individual stock. So we don't take into account personal circumstances. All right, I hope you are ready to go. We'll get into it now. I'll just get rid of that. Actually, what I'll do is transition to that. So we're just going to get up a chart now. I think you should be able to see it in just a second. There we go. All right, we can see the ASX200 here. This is the CFD, so I don't know what that line is there. It's a funny looking little line. All right, what we'll do, obviously, the usual we'll go through today. We'll just take a look at the markets, a few trades we got going, just what we see happening. And then what I want to do is go through just a bit of the basics of the way we look at the market. I know we've probably spoken about this a bit. We've discussed it a bit, but just had a query from, I think it was David on one of the videos, just to go through some of it for a beginner. And I think it's always good to go through just the technical analysis that we do and how we approach it. So we'll be discussing a bit of that today, and then we'll go into the usual, just looking at some stocks, what we think's moving. And we'll also take a look at maybe... Well, just the usual, just see how our pound trade's going. We'll probably look at that now. So we'll get into it, guys. So just be wary when later on when you've got any stocks that you want to have a quick look at. Yeah, jump into it and just put it onto the chat. All right. All right. So we've got the ASX. It's what we can see here. The resistance up at 57.76 is still holding. But the thing is, we're building higher lows into it. We've just washed out that 57.40 at the moment. Good work, Paul. You're dedicated, mate. Just saw your comment then. Dedicated. Good work. So yeah, what we've got this high low. So we've got the low down here that engineered that move all the way up to 57.76. Then some heavy selling, but it was soaked up around the 57.12 mark, and we did try to retest that a couple of times here, and then just bounced straight back up, took out this lower high. So really, from that price structure here and here, the trend is starting to push higher. This could just be a washout on the open, which you tend to get time and time again. If we actually go look at the ASX, let's just take a look at that, because that's obviously clean. It's the stocks, not the CFD. The CFD takes into account the futures as well. What do we got here? Daily. Yeah, look, it's still looking good. You can see that it's mainly this price action we're concerned about. You can see that rejection here, a strong candle up. We've had a sell down, and it's opened. It's traded around those lows, but it couldn't get through that candle, that lower 5700, and it's been creeping up. The lows have been creeping up. So, look, if we get a breakthrough 57.75, a push up through, which I wouldn't expect prior to the payrolls. I think, if that gets up through that, that's a continuation pattern. That's like we said, we call that an inside continuation. Inside of this move up, inside of this pull back here, and inside of that we get that continuation. So you got a pop up, a pull back, build another high low, inside break of the minor high, and then that really, technically that should push us up and through 58.25 on towards 6,000, which we've been discussing for a while now. So we'll see how that goes. I think that's looking. Let's look at the intraday 30-minute charts. Well, it's pretty much the same. Had that bit of a washout just on the open there, but that was rejected at 57.40. And don't forget, that happens. We can get easily wash out some levels if it's coming close. Easily wash out and then pop back up. So, look, I think it's still got some work to do. I'll be pretty confident when it gets through 57.60, if that's the case, that we're going to head higher. But until then, it's we still got some pressure on the downside here. You can see the market's contracting in. If we get back to the probably the 30-minute won't show it too much, but you can see that market's actually contracting in, which is it's not a seriously positive sign, but just taking into context what's happening on the daily, I think you had that good leg up. We had that pullback, built that base at 57, to push up, retested the highs, pull back. If this is a lower high, we're gearing up for a move higher. So I'm biased to the upside on the daily chart. So just remembering, when we go back to the 30-minute chart, we're biased upwards on the daily. So this could easily roll over, and then if that's going to roll over, take out 57.40, and there's pressure on the downside, then you'd expect it to get 56.80. But again, I'm biased on the upside for the daily charts anyway. But we'll see how that plays out. What is everyone else's view on the ASX at the moment? Pretty much the US is gearing up for interest rate rises, so be interesting to see how that goes. I think the market is very much, it's been really bullish, and I think what people are getting a bit sick of now is Trump talk, I guess you can say. Trump pumping up, saying how good how good everything's going to be once he gets the tax reforms and all these sorts of things, and that's what the market's gone up on the back of that potential tax reforms. Now he keeps talking about it with no specifics, and every time it comes to the fore, where it's going to be the next thing they discuss, something else is popping up at the moment. So I think that's put any sort of tax reform announcement on the back burner. So I think people are going to get sick of that sooner or later and want to see some action. They do now, because if the market's not going to go much higher, if it's struggling to go higher, and there's nothing happens in the way of news about tax reforms, then people are just going to, eventually you'd think they'll book some profit, especially if we start getting rate rises, which put pressure on equities as well. Don't forget, higher rates in the US, borrowing costs go up, and that's borrowing for anything, borrowing into stocks, borrowing to build, borrowing to expand your business, anything. The cost of borrowing goes up, so that's going to crimp a few things. And if market's gone on the back of projected higher earnings, then there's going to be a bit of an issue, you'd think anyway. So let's take a look now. Let's just click over. I don't even know what we're doing now. Here we go. So that's our 30-minute chart there. You can see the trend. We'll just draw it in. Yeah, the market's, well, would say it's contracting, but it's actually, this is the overnight data as well. So there's a few. Yeah, so this move was up and overnight. If we hold this level, it's only really pushing down to that support zone, then I do think it's going to head higher. All right, let's just take a look at the S&P. I don't know, I guess a few of you would know that we've alerted to this a while ago. Well, it was way back on, what are we now? Somewhere around the 10th, the 9th or 10th of Feb, so about a month ago now. About a month ago now, we alerted to that as a potential short squeeze. And I hope you're understanding when I'm banging about short squeeze or long squeeze, what I'm actually talking about, or what I'm meaning. So you can see that market's pushed down, it's had to retest this level, it's popped back up. There'd be a lot of people selling it up here at 22.98, selling down here, selling potentially here, especially with that spike through, jumping in, and again up here. So you've got all these selling building up. And that's why I like to say, always take note of a clear level that's popped back, it's pushed through it and spiked back up in it. That's more inclined to be a washout, especially when you start retesting those highs like we did at 22.95, so that you can see that shorts will be jumping in there. but you can see those MAs really, it's just contracting together. They're coming in together. So that's really, for me, it was building the fuel to squeeze them all back out. So any of those short positions, those sellers that may be back here, getting a bit confident in here because we didn't get back up to 2303. And you can see that, and then you get that washout. So they're getting confident here that's going to roll over and head down to 2267. And they're building up potentially shorts, long-term, short-term, whatever you want to say, intraday shorts. And that was, and we knew from our indicators that we look at that they're really biased to the short side. There's a lot of build-up of short positions. You know, as a percent, I think it was about 80 to 85% short, potentially to 15% long. So you can think if most of the market's built up short, that's a lot of energy that could really take that market higher, and that was our view at the time. And it's look, it's played out beautifully. So I hope you're sort of understanding where I'm coming from when I talk about short squeeze, long squeeze. It doesn't happen all the time. Sometimes that can be a washout, which actually can lead to further selling, like we mentioned back here. That doesn't always, you know, a spike through doesn't always lead to, you know, a bit of the opposite move, you know, sorry, a move in the opposite direction. It can actually be a precursor to something rolling over, but you've got to understand if there is some longs or shorts built up. So long story short, what we're seeing here is we've got a level down at 2350 with really this anchor level for this move up is way down at 2359. So I know the market's been selling off from these highs up at 2401, say 24. It's about, where are we now? About 35 points, 30 to 35 points lower from those highs. My opinion, doesn't mean anything until that anchor's broken. So this is the key level, this key high up here. We made those highs, you know, that rush up. I can't remember what's on the back of. If anyone remembers, just whack it into chat. I don't remember the news of that night, why it was so positive, but anyway, that sell-off, it's just, you can see lower highs, lower lows, lower highs, lower lows. It just keeps forming all the way down, but it hasn't broken that anchor. And that's where I think people who are selling into this is going to get caught again, potentially get caught again. If this holds as a higher low in off this sort of support zone and we start pushing up out of contraction there, it's going to be a bit more of the same. So I'll just change that to a different color. Bit more of the same. You've got to be careful. This is where we start getting, you know, traders getting confident and they're trying to preempt well, that's not very good. Trying to preempt a bit of a move down, and they think, oh, this is going to break there. So they're trying to preempt that. The market will contract back into it. As long as it's holding above that anchor level, which is at 23.59, this market can easily build and engineer another move back up. And, you know, if it takes out this level just in here, if it takes out, what's that? This little lower high in here at 23.73, then I think, yeah, Trump's speech, good point. He talks a lot of rubbish, doesn't he? He should be an actor. So yeah, you can see if it pops up through that level there, then I think we're going to get all these shorts that are built up here. You've got a confident, and, you know, especially if you're way up here, you've got all these shorts that are going to get stopped up on these little lower highs, you know, as it breaks through. That could easily squeeze them all back out and take out those highs. We don't know what's going to happen, but there's still potential for that, and it hasn't broken that anchor. If it gets through there, then I'd be tentative about jumping in long again anyway. I mean, it doesn't mean you could spike through and then pop back up, you know, longer term correction, but we'll see. Because it has been a good move up from, you know, that initial start of the short squeeze below 2300. So that makes sense, guys. There's still room to move. Even though we've moved down the last few days, there's still there's a lot of room to move on the upside. For the S&P. It could just keep squeezing people out, and just remember, it does it time and time again, and people are not prepared for it. I think this is where we'll talk about a bit later on, your anchor levels. This is where your anchor levels come in to be really important. So you can just lean on them and just make sure you've got a bias for the market. Until that's broken, for me, that bias is still up on this S&P. It doesn't matter what happened in the last couple of days. It's profit taking. You know, profit taking from people who bought it down here, who knows? And that really spike up higher. I mean, that's not a great sign for lows. When that happens like that, remember we say, even on the stocks, steam has got to be taken out of that move. And you can see the way this has moved down, it's not conducive of a very negative market because of its, you know, it's contracting lower. When it spikes straight down, or it comes flying straight back down, okay, that could be a different story. All right, does that make sense what I'm saying there, guys? Or am I talking rubbish again, as my wife would say? All right, AHY, recovery play, breakthrough resistance, and now retracing. Just get on top of me there, and just remind me of that a bit later on there. We'll chat about that in a second. So that's a bit of an example. And again, we've got another example. This is a long squeeze, so this was in reverse on the pound, and that's going great guns. I think that's going to really push down to 2016, especially now that the US dollar, you know, there's rate rises on the cards. We don't know how many of this. And last night they had some numbers out of the US, some employment data, which came out a lot stronger than they expected. So you'll find there'll be a bit of revisions to tomorrow night's numbers from the analysts, these qualified analysts that really have no idea, if you ask me. They're all just guessing at it. But no, it'll be interesting if they revise their numbers up a bit better, because if we had a strong employment number last night, then, you know, strong employment, we're not so much worried about March now. We'll be looking towards when's the second rate rise for the year. Is that going to be earlier rather than later? So just keep an eye on that anyway. All right, so yeah, this one was the reverse on the pound. We had pop up, move down, pop back up, retest those highs at 27.30, and then you can see in here that low washed out this low, so you can say that's a washout. And then we started oscillating between these two levels, 25.78 and 23.90, building higher lows, and that pushed up, would have dragged in a few buyers in there. Everyone's getting a bit positive that's going to break up, probably build another higher low in here, and then bang through 25.78. Didn't happen. It come flying back down to support at 23.90, and this is what we like to see. So if you're thinking about long or shorts, and you're thinking it could potentially squeeze, work off a shoulder, you know, whether it's a shoulder up or a shoulder down. This is what we call a shoulder, you know, in conjunction to this double top, little shoulder, that's really pressure for the downside, and the reverse for the upside. This, it's probably not the best shoulder. I'm just trying to show you one, but anyway, if you can understand what I'm talking about, I'll speak about it a bit more in a minute. Try to work off shoulders, and they're always a good point, because if your market's going up, and it's had a bit of a pullback, look for that shoulder, that inside high low to work from. That means it's just extra confirmation that you're on the right side of the market. But yeah, I think that's what triggered me to look at this as a short position. We know that they were built up on the long side. You can see through here, through indicators. So that's going great. We'll just see if that can continue. Anyway, let's get into it now, guys. I want to... there's no more questions on that. I'll just see where the ASX is at the moment. I think it's down about 10. Down 8 points. We've got WBC's really kicked above 35. We've got the 35.14, so that's taken out, I think, a good level. It's taken out this level here at 35. If we can close above there, close up around 35, that'd be great. I think that's looking really good. If you saw the alert previously, from the lows to the highs, it's sort of going to take us up towards, I can never remember the actual figures. You know, this move from that low to that high, you know, extrapolate that out from 31.50, say. It's going to take us somewhere around 36.50, I think. So we've got, it's not a target as such, but it could be where we see a deeper correction or corrective move, if that made any sense. All right, WBC, that's good. This one, we had that as a potential long to break up through 3. Now that's pretty much looks to me like it's failing. I think we'll have to reassess that one. So anyone out there that's looking at Whitehaven, just stay on the sidelines for now. That didn't trigger through 3. I think it's 302 highs we're looking for, and you'd hold some higher lows, but didn't play out that way. So plan didn't work out well. So that's off the cards. We got Coke. Coke, it's look, just this recent action, it looks like it's struggling, but it still looks okay. It looks like it could roll over, but these MAs are quite strong. It's opening down and then get bought up during the day, so it looks great. The thing that's a real kicker for us is that weekly. That weekly looks great. You can see that nice, you know, U-shaped base, and then again here, and what we call a cup and handle type of thing. It's pushed up, that little cup move, and it's going up. So that's definitely, I'd still like it for a push up to 11 or through 11. We'll see how it goes up today. We might get a bit of steam taken out of this, pull back a bit of a wash out of some of these lows, but still hold that trend, because the key levels right down at 9.75. It could pull back to 10, retest 10, and then go again. We'll see how that goes. It still looks good. CKF, still like that. It was a bit of a bummer how that sold off through once we got in. We got brought in, pushed into that trade, and it looks great. It still looks really good. I mean, nothing's broken just yet, but great work. Thanks, Nandor. Yeah, so I think that still can look, if it gets up through here, I think it's going to be on for that trade. It's going to be really good. And the weekly, look where the weekly is, stochastics, that all lines up really nicely. You can see that move back, push up, high lows building contraction. That breakout of contraction is what we love on the weekly chart, and we're starting to, the stochastics are in a nice little zone now. That corrective action, it's starting to get held up, below, I think it's around 580 thereabouts on the daily. So this is a nice area that it could work off for a potential another leg up, but we'll just see how it goes. Do like it. Anyway, I'm getting sidetracked again. What I'll do now is just click over to a few things that we like to look at. I just want to get one example before I forget. CLQ, I'll give you this example in a minute. Just going to get this stock up. I think it's a good little example of some price structure. So what I'm going to talk about now is really just, like I said, I think it's important to learn your technicals. I think fundamentals are good too. I think what fundamentals for me they lack is just the timing. It's easy to say something's oversold, but how long is it going to stay oversold? When's it going to go? I think that's the key point in anyone's trading. I know we can probably argue black and blue, but if you're a pure fundamentalist, I think there's going to be times when you sit around and, great trade, it could go in your way, and you can turn around and say, look, that's gone exactly like I said, but you spent a year sitting, holding a position. That's a waste of time, if you ask me. So if you get your timing down and you practice working on your timing, your entries, you may have to sometimes give up a bit. You might think, say this, for example, was overbought at this stage. Sorry, oversold at this stage. It looked like a great buy. Fundamentally had some great value. So someone bought it here. Okay, I might have got in here, gave up a little bit on that trade, but technically that looks nice for me. Break with a, push up through maybe on that candle the next couple of days, buy on a break up through here, and then you've got, that's when you're getting that acceleration from contraction to expansion, which is what we love. All right, so I think timing can be very important. I mean, there's going to be times when I miss out, because the trade setup is just not there. It can turn on a dime, but it's hard to say, even as a fundamentalist, it's hard to say if they've got a good announcement that pops out, the market's going down, they announce something positive and then it turns on a dime and goes straight back up. I mean, really, that if you get into that one at the lows, then it's just luck. All right. So what I like to work on is reading about the fundamentals, trying to learn your bits and pieces, what it's saying in the story, just see a story of the stock, and then I'm always going to my technicals, always leaning on my technicals to see for the entry, just to see. And I just really want the entries refined so I can minimize the risk. All right, that makes sense. So I think that's important. So what we'll go through now is just what are we looking at? I mean, I'll talk about anchors and bits and pieces like that. I hope this stays in draw mode. All right. Just trying to make snap mode. No, that's not what I meant. All right. So what? Let's just get rid of that. And I'll get rid of that. All right, so what we're generally looking at, the market could be bouncing around between support and resistance. All right, we don't know what's going to happen. So we might have major level up here, major support down here. It could be a weekly, daily chart. So just remember everything, what is it called? The Dow theory, I think. Everything a move, whether it doesn't matter what time frame, with a daily, minute, 5 minute, hourly, weekly, whatever, they all move with higher lows, higher highs, higher lows. That's what you're trying to break down each leg into, higher highs, higher lows, and try to follow something that way. And the same, the reverse for short positions. So if you're selling, so what we might be trying to look at is, for example, whoops, I just hit my. Sorry, just get that better. We're just trying to see what a market's doing. If the market's pushed up, and it might have spiked up. Just 1 second there, guys. Be a tick. Back there, guys. Sorry about that. So what we're saying is the market, it can oscillate between, when it's not trending, you're trying to analyze it between resistance and support. Now, we don't know. If we're thinking it's bouncing around between these two levels on a weekly chart, we're obviously trying to potentially look at getting out at resistance and buying off the support zone. All right, but we want to look at failed, actually, hitting my little camera there. So we're trying to buy off the support zone. If it's pushed up there, for example, the market's moved down, building lower highs. All right, it's pushed down into support. Now, we don't know, at this stage, we don't know what's happening. We just want to look for a certain type of setup. Buying off support, it's like anything for me. I want to buy, you don't know if it's going to continue, it might spike lower and then pop back up. And then what we're looking for, and we've mentioned this time and time again, is high lows. All right, so that's evidence of potential buyers coming to the market. So once you get that, you can look at that as a failed continuation. The key thing, is like I said, is I'll actually just draw it in here. Your anchors. All right, your anchor to that downtrend is here, and remember that's on a breakthrough here, a breakthrough that low. So once it takes out the low, that's the key anchor. That's your key level. Well, if it pulls back, if it can't get through that low, or just spikes through it, or pulls up short and then starts going back up, that trend is basically over. And you can view that as over. From there, you're just looking for your entry. So at this stage, our anchor was broken. It went up the retest. It built a high low. And sometimes you can trade off that because you know you're in a good zone, off a support zone. But if you're not off a support zone, I'd prefer to be waiting just to see if that anchor can break. And that's what I'm always looking for. So if this market's retreating from the resistance level, I've marked up my support zone where I want to buy potentially at support. And then I'm trying to look for what is playing out. Now, this is what we call this is a complex correction. So say, for instance, that market's been trending up. All right. So if you look at the market's trending up, and each leg can be broken down. Like I said, the Dow theory, higher highs, higher lows, they work their way back up. A bit of a correction here, a bit of move back up. Trades in this zone, if we can draw that up. Trades off, that pullback there, off that low there. They're called continuation in contrast to this. Now, if you get these sort of lower highs, this type of corrective action, this is what we call a complex correction. So you're trying to view it, you're trying to pick where it's going to turn, if it's going to turn at all. I mean, if this market comes straight down, breaks that support, goes back up, and then pulls back and heads lower, then we've got a different issue. We might have to just sit and wait for that actual trade to start building again. But this is what we're calling a complex correction. All right, where you get these lower highs, lower lows back into either a support zone or retest the anchor, or if it's just going to sit and break that trend altogether. All right, so ideally what we're looking for, we want to break this leg down. It's either coming back to support, or if we can extend this out, that's more of an example of a range trading market. But if we're looking for continuation, what we're looking for is the market's popped up. Maybe, well, that's not what I wanted. So I'm trying to draw this part up again. It's built that support zone in there. The market's headed up. So you've got this type of price action. Now, what we want to see, we've hit it, and we know that resistance is mainly confirmed when we get this here, build that lower high. So you go, okay, this leg potentially is over. It might correct. So at this stage, right now, if this is the hard right edge on the market, we don't know if this is just going to correct, if it's going to break, if it's going to completely fail. We don't know how far this leg is going to head down. This, if we just sort of forget from this side of the market, just thinking of this as a range trade market, it's banging on between resistance and support. We want to buy off support. Obviously, we want to sell into resistance because we know that that's longer term range trading. If it's not, what we're looking for is, we found that that's become our resistance level, up whatever it may be. The market's retreating off that or contracting lower, or it's in the midst of a bit of a correction. But what we don't know is how far it's going to go. And this is where your anchors come into it. We want to always keep an eye on what are your anchor and what is it doing. So at this stage, we've got anchors built here, and then we get a break of this low. It's pushed down. There's a new anchor up here. It's retreated back up. Oh, this is all on the lower time frame. And as soon as it gets through that low, that becomes our anchor, and so on and so forth until we get this low, and now that's our current anchor as it stands. All right, and what we want to look for is what we said. This becomes a corrective action, but it's more what we're looking for at this stage is more continuation pattern. So we've had a major leg up, correction, major leg up, we're getting a correction, and then we're just trying to pick the point where we want to jump back in for a potential next move higher. And that could be as soon as we get through that anchor, then we want to look for our entry, and that's ideally how I'd attack it each time. All right, does that make sense, guys? Sometimes what's in my head doesn't come out completely right, but each of these legs, so this is our next leg up. If we draw it, don't forget each of these legs can be built. It's actually horrible what I'm trying to do. These legs up really can be broken down into higher highs, higher lows, and so on. All right, and then the same thing on the way down. That actually looks like rubbish. So if you can understand what I'm talking about, so that leg up there, you still got to look at it as higher highs, higher lows. You follow it up, and as soon as the higher high, it doesn't make another higher high through here, and it starts building that lower high. That's our shoulder. That's potentially, if we're long, we've taken advantage of this leg up. We want to look at potentially taking a partial exit or just getting out of the position, and then try to view on the time frame one step back. So if this is a daily chart we're following here, we want to look at it on the weekly. Okay, that weekly's gone up, it's pulled back. We're looking for a continuation pattern in here from the daily charts. It's set up from the daily. Look at your daily anchors on the way down, and then when it starts, buyers start stepping back in here, and then it's broken that anchor down. So we go from correction, or contraction. We're looking for expansion at this stage. We're getting the high lows in, buyers are starting to step in, and then at this stage, this is probably the perfect opportunity where we'd be looking for an entry setup. All right, so that's in a continuation market. So the weekly trend is up. We've got the daily backing off a bit, but the weekly trend is still holding. The key level's down here on the weekly. We've had that extension up, contraction lower. We're looking for an area or a zone on the weekly where we can actually buy into it and take advantage of the next weekly move higher. And that's broken down on the daily charts. Now, what I was mentioning before is really just, this is really trying to trade between support and resistance. And if you can just take off this, I'll get rid of this. This is more of a market range trading. All right, the market might have been, you know, something like that. So it's just oscillating between. So if it's oscillating between, and we're at this stage here, we're just taking that same type of approach with anchors. If this is a weekly move up to resistance, it's pulled back to support, it's gone and retested resistance. Okay, the next stop port of call is if it pulls back down to resistance. This is an overall, this market's range trading on the weekly chart. We're just trying to have that approach of trading between support and resistance. And on a weekly, you can get a lot of fat out of those trades. It happens time and time again where you can just trade. The market is not going anywhere on a weekly basis, but on a daily basis, we can easily break it down, get nice little entries. But the approach on a daily is the same here as it is here. You're still looking for the anchors to break potentially, and you get that little setup in here. All right. So that's how we want to approach with anchors, how we want to try to approach a buy zone of where we want to buy into. Whether it's continuation like this, continuation higher, that's a trend on the weekly, trend up, correction, which you always have, another trend up, leg higher, corrective action of that leg. And we always try to stick with the rule 1/3 to 2/3. So if that leg is projected down, 1/3 to 2/3 of that leg down, we expect a correction. So that's probably about 1/3 potentially, unless I change it. So that corrective action down is 1/3 to 2/3 of that leg up, and it pops back up. That's the next leg higher, potentially the same type of distance. And this is how we try to manage our trades going forward. We try to view where it's going to, is just trying to project that leg up to here. Okay, if we get it right, it's pulled back. We made a lower high. That's a good indication that this leg is starting to contract. And as soon as we get that lower low, we know that it is contracting. And from there, we're just trying to think, okay, 1/3 to 2/3 of this leg up, it's contracting. That's what we expect somewhere within that zone. We expect for continuation. It's got to pull up. Buyers have got to step in around that 1/3 to 2/3 area and start to step into the market. If they don't, we may get this pull back all the way back down to the anchor, and then we may have a bit of an issue. Okay, it may be a longer term correction, but you really just got to categorize the markets into different areas and different zones. All right, does that make sense? So as a beginner, I'd be focusing and try to break down the markets, try to stick to maybe, especially with stocks, look at a weekly chart, try to get the good zone. If it's weekly, it's trending higher. Try to think, is it trending, is it a continuation trade, or is it looking like it's just oscillating between support and resistance? Where are your key levels on the weekly chart? Where is your potential anchor, or where is a major support zone? Where is a major resistance zone? And then break it down on the daily. And then on the daily, you're really just trying to search what's actually happening. If we go to, the only reason I got this up is really to try to discuss that that scenario. This is CLQ. I just happen to look at this. What we've got, just breaking it down, we've got that was a leg up. So if we started looking at it at this stage, we've got, you can see that it's projected up. We've got a little minor anchor level here. That's produced that little leg up here. It's contracted lower. Another little anchor level. It's just touched on the highs. Hasn't really done much until this anchor breaks. Then this leg potentially could be running out of steam here. It's pulled back below that anchor. It's just really contracted back. Brought in some more, people sold it off. Brought in some more buyers. Buyers are still stepping in, at higher levels. You've got an inside break up. Then that's projected it through this resistance. That's become your anchor in here. So that's your key level. It's pushed it back up. All right, then you just sort of think of rinsing and repeating. You just got to go through that process. Where's your anchor level? What's happening? This is a major anchor level just in here. You've got that pop up. We've got a lower high just here. It's taken out that low. Okay, we're probably correcting. And potentially that's the end of this major leg up. It's correcting lower through here. We've come back down. We've just retested this zone in here at 37. Washed it out, but haven't closed below it, which is not a bad sign. We've gone back down and retested it. As soon as we take out that level, potentially this is the next area where we're going to produce another leg higher. And if we can take that up, it's actually gone on with it. So it's really expanded high. It's gone. It's a really strong market, CLQ. So expecting that's going to start running out of steam. It's been overbought for a while. But you can see how we sort of try to break, that's the leg up, and we're trying to break it down into where we can see where, is it going to roll over? Is it worth taking a continuation trade? When the market's extended up like this, is it worth buying up at this level? It's had anchor. It's really had a little leg up, little pop up, little pop up, little pop up. Are we getting to the end of that longer term move higher? All right. And if we are, would you want to buy a continuation trade in here? Your risk could easily be below here. Maybe if you bought it in here, it's come up, it's run out of steam, it's hit resistance, it's built that lower high. Okay, alarm bells should be ringing. If it can't get up through there, alarm bells should be ringing. You can cut that at break even, potentially with a move through here. They might have locked in a small loss, but no big deal. And then what you're looking for is really that pop through that support zone at 52. Okay, that to me is saying that leg up is running out of steam. It's starting to contract. Now, where are we going to contract to? Where are we going to, a longer term, this is off. This is stepping one back. On the weekly chart, that's contracting in here. Okay, it didn't contract too far. 1/3 to 2/3 of that leg up is probably around about this. It's below this zone here. Well, it's around this zone. It's contracted within our rules. We're starting to hold up. So, okay, we're starting to retest that support. We couldn't get down to this low. We made a high low just in here. Okay, that's a nice little sign. If we take out this high, I think it could be on. All right, and it started to push up, which it definitely took out this little lower high in here. Pop back up. It's still holding within that trend. Within that high. So what I tend to do is just see, I just tend to go across the highs just to give you an indication of what's happening. You can see that's market. If you're looking at it around this stage, it would have been just awesome. All right, nice little setup just in this zone here. But even in here, I think it's a tougher setup to buy into. But that for me is a nice little indication that, okay, we're starting to come out of contraction lower. We're pushing out of contraction lower. We're starting to build and engineer a move higher. And ideally, once that's gone up through, I wouldn't buy it in here. Maybe at this stage I would have been thinking, oh, I've missed the trade. It's pulled back, correcting back down. It's really just retesting that support in here. And again, it's come back down, retest that little initial breakout area, and then it started to hold again. So for me, this zone in here is an ideal buy. It's an ideal buy zone. And that really produced, once you got that there and it's taken out this, we'll draw that in a different color. once it's taken out that little high there, you can see how that market's really accelerated higher. So for me, I love to see this sort of stuff. If it accelerates high, it's taken out that high, you've got a few levels. If it takes them out, then the markets are just going to drag in buyers. So that there's a nice little example of, price action, I guess, at its best. So does that make sense what we're looking for? Just trying to break it down when you've got a leg up, just trying to break it down when it's contracting, and then looking for higher lows, buyers to step in. You haven't got a lot of evidence at this stage, if you can see, of buyers stepping into the market. You just see that the anchor's broken. So once the anchor's broken, then I'm looking for an entry setup. Didn't really get it here. There's nothing flash that stands out. Then you've got a big correction off those highs. It's attempted to go up. You go, okay, maybe this market's going to roll over. All right, so you're just looking for evidence of it rolling over now. This could easily, at this stage, could have gone the next day was green, but that next day could have gone bang, straight through that low. But instead, buyers were stepping in here. You go, okay, that's off a good level. That all makes sense. That's starting to play out really well. And then it's got to break through this high. You go, okay, that's on. I think the long side's really going to start playing out. And you can see my MAs. I love to look at the MAs going well. Market's coming off an extended zone to the downside, starting to come off there. Buyers are happy to step in. So that pressure down was quite hard, but buyers were soaking it up as it moved down into overextended. So there's a lot of factors there that you can just add together. You just build your picture. All right, that's probably enough of there. We'll start looking at some trades, guys. Everyone, does that make sense what we look at? Does anyone want to just throw in a few questions, or we're happy just to get into some trades? I'll minimize that. Oops, what happened there? Oh, market's dropped about 10 or 15 points since we've been talking. Not the best time to talk, eh? Yeah, a bit of a pullback. I think just the banks across the board probably sold off a bit. All right, now, what were we looking at? Start off with SkyTam, AHY. Yeah, did we look at this just the other day? So that there, as potential setup. We'll just go through the motions. I know some people think it's a bit silly, but I always like to go back, not to all the data, but just go back enough time just to see, give me an overall picture of what's happening. Okay, you can see that monthly's tried to go low, popped up to these highs at 230. Something during that month it's caned the market. It's sold through those lows. Okay, is it going to keep going at this stage? At this stage, is it going to keep going? It's gapped down. I don't know what happened. If anyone knows, if you know what happened at AHY at that time, I don't know what's going. Whatever news that's caused that to sell off through the lows. Then it started getting bought up, and then you can see it's building lower highs, but then it's got bought up again. So this one tends to look like it, when it rolls over, it builds lower highs. It takes out the lows, but when it's not taken out by much and it bounces back quite strongly, that's not a bad sign at all, because you can easily take out those lows and then engineer it. So what you're looking for is this higher low. And as soon as you get this type of price action, when it's popped up through, through that high again after washing out the lows, that's showing you that there is some buying strength coming in there. And the selling strength is sooner or later, it will start running out of the market. And then you've got this little high-low build at 140, which has produced this leg up to 180. So if we look at it from that point of view, yeah, it's got potential. So from here, I'd like to be just looking at it. So you can see right through 160. That's, it's tested up there a few times and then broke it. Was at the end of last month. Broke straight up and through the end of last month, took it up to 180. And that kind of price action, you're going to get, like we said, you're going to get a bit of profit taking, which has pushed the market down. So you're just trying to look for an area where the buyer's happy to step in again. Your natural area is the breakout zone, and that happens to be around that 160 mark, give or take a few cents. All right, does that make sense? So, and that's, you can see those little green candles starting to reject below 160. And today it's starting to look good. If that pushes up through 164, then I think this thing, it's a good little area. And what I'd ideally like to be looking for is that little pop up, pull back, build a high low, and then work off the high low. I mean, it could easily turn. There's different ways. I mean, you've really got to sit down and think about your entry setups, what you look for, what works for you, what doesn't work for you. I generally always like to see higher lows build, something like this. This is a high low in context of this. So if that's a high low there, I'm just looking for an area to break. So as soon as it potentially got through here, there was a 150. That would have been a nice little buy zone. You've got your high-low built in context to all this price action. And that, for me, I expected to go and retest 160 at the very least. So that was a good little entry spot through here, risk below here. Okay, away you go. At the moment, I'd rather see... And there's different ways to enter. Some a bit more risky, but can pay off better. You've just got to pick your tools. And what we would say is you count back a few candles. You've got a couple of positive candles, a few of these highs, potentially through this little high on this candle. What's that? High 164.5, maybe buying it at 165, 66. Put a buy on stop. If it trades 166, you enter. Put your stop below 158 lows, and then hopefully that continues on. Now that's a bit more aggressive, that type of entry, but your payoff can be quite good. I mean, I may not even get into it if I'm waiting for the high low to build. Pop up through there, build the high low, and then go. I may not get my entry, but that's another way to enter. But you just got to realize you could easily make a lower high at 168. You're 2 cents in the money, and then it rolls over and takes out 158 to make a deeper correction. So you've got to add all these up and weigh it all up when you're looking to enter the market. Does that make sense there on that one? But yeah, that's definitely in a nice little zone, either way you look at it. So really it comes down to, for me, it's just purely looking at the entry. And I'm guessing you're probably looking at it for the same reason. Nando, what do you got here? LAA. Just... Autos. If I'm looking at this one, I'd be more inclined to sell it than anything else. That, for me, the only thing that's got to contend with, if this can reject and build a high low in here, it could be on, but you can see the strength of that is increasing, but the MAs are starting to expand apart or spread apart. So that's not a good sign for this stock. It could easily attack 13, 12.5, 13. But the fact that, the beauty of WIS stocks, whereas opposed to futures FX, there's not a lot of room to move on the downside when something's at 13 or 14 cents. I know it can, but you're not going to risk the fact that it could easily go up through $1. There's a lot more room on the upside, if that makes sense. So this sort of has that natural support zone. That spike down there was rejected, but it only really built another high low, retested that high low. What am I talking about? Lower high at 26 and started rolling over. You got that little shoulder trade in here. So if you're thinking about going short at this stage, good setup. Pressure's definitely down on the downside. But with shorts as opposed to longs, like I said, you can only go to zero. So you've got to be, I guess, quick. Any sort of sign of buyer starting to step in, you just jump out of your shorts. But on the long side, you can let it run. All right, so does this make sense? That one there. Let's go to a daily. Really, that key level is 22. It could just be spiking down. This could be rejected, which builds a lower high in comparison to 13 cents or 12.5 lows. But still, I think this is a long way off for me to be looking to jump in. I just want to see it do a bit more work. What do we got there? Huo. Gee, I don't know what to happen on that candle. Major rejection open. Cane down to 480. It's probably a very small traded stock, so I guess that's more got to do with illiquidity. But that price structure, that's right up into a resistance zone there at 5. It's basically pushed straight up into it. And really, this leg up hasn't corrected. You've got this beautiful. I mean, this is ideally just in here. If you're seeing what I'm talking about here, you've got to push up, pop back down into support zone, and don't forget that's a support zone. So when you get these big move up off that support, let's just draw it. This, I'm not saying it's looking nice just here, but that structure just in here looks great, and this is awesome. I hope everyone's seeing what I'm seeing. Look, at trades, it's not going to suit everyone, this type of share. Oh, where's it going? Come back here. So this is what we're ideally got our eye on at that stage, that support zone there. And you can see this little push down through here. After this structure, you know it's moved right down, support down here, it's popped back up, took out this little lower high, washed it out, and it's had a secondary go. So that's a deeper correction. The market's still looking a bit negative. Sellers are taking control. It's pushed it down with lower highs, and you can see that extend into that zone. So it really started racing down into that support zone. Then it got soaked up again, but we only got back up to 350. But the thing is, you can see it pushed back down again, then it went and retested. So when it retests that recent lower high, that's not a bad sign because it's starting to get bought up off there. And you can see there's buyers starting to step in off this zone. And then it's had another go, pushed back down, extended into there. It's really washed out this little low here, but it's only going back and down to that same support zone. And then we started getting bought up again. So anyone that's selling it, you probably find that buyers are starting, they're happy to step in around 3 to 310, say, through that that support zone in there. So they're happy to buy in at that area, and you can see that they're supporting it and they're stepping in. Now I really like that price action, and I probably wouldn't so much buy it in here because this is, like I said, your anchor to this move down. So when that key level is broken, and you can see that through here, it's broken up here, we've got to push back down to that zone. That's where I would ideally start to look for an entry, and that's where I see this as a prime little entry zone. Could everyone see what I'm seeing there? I will in a second, Paul, no problem. Can everyone see what I'm seeing? So I'm just trying to build up my picture in my head, and you can see that support zone was getting held, and when we start getting, sellers are in control at this stage, but then they start slipping. Buyers are happy to step in and soak them up. So they're selling it down hard. It's not going anywhere. Buying starting to pick up, and especially when you break through that high, that for me and the sellers are, okay, last-ditched effort. We give it another go. We try to sell it down. It's got bought up, and we built this little higher low just in here. I mean, it was really hard and fast, and it got rejected pretty quick. Then we had another go down there, and you can see buyers are starting to step in. The market's contracting, and that's what I love to see, especially after taking out that key level at 350 to 55. All right, so that, to me, at this stage, would have been a prime entry just through that maybe 380. Buy it at 380. You've got that extension up. You've got your risk ideally just below here at 350. So what it does when you go from contraction into expansion, contraction tends to really minimize your risk. And you can really, from a technical point of view, you know exactly where you're going to place your risk. And anyone who's selling it in here, as soon as it breaks up through there, they're proven wrong. All right, does that make sense? They're proven wrong. That breaks up through here, 380. You know where your buys, your last high or low. Your risk can go below there because if it pops up through here and then rolls over and takes you out, okay, something's wrong. All right. Definitely. That is an awesome. I really do like that. I mean, it might be a bit thin. I don't know what the volume was at that time, but that, if I can just get rid of some of these, I just want to see something. Probably, and you can even see that. That's the most recent high. When you got that little push up here, it's broken not only this level, it's just broken out a longer term contraction too. And that, for me, is just an absolute beautiful entry. So you can see what we're looking for in a market when we're trying to build our picture. So all this price action goes into making up the reason why we buy it. And the reason at this stage, once we get that breakout here, breakthrough here, okay, in my head, all I'm looking for is that entry signal, is that entry setup. And we got that just here in that expansion. And you can see when you're right, you get acceleration higher. And when you get that, start getting that acceleration higher, okay, it's just sit back and enjoy. Sit back and watch it. What do we got here? DRM. Drum. Oh. This one here is a bit like the previous one, LAA. It's way down into support zone. I think it's got a hell of a lot of work to do. Yeah, it's heading down to that 20 zone is where I don't know where it started, what the price action at the start. It was probably floated around 20, I'm guessing. There's my drink bottle there. I need my water. So you can see it probably floated at 20, had that little push up, euphoria up to 170. Had another go. This is on the monthly, this is longer term, but just explaining what's happening, lower high. So remember what we discussed previously, the lower highs, high lows, all that sort of stuff. It's common to pretty much every chart. Sometimes you get washouts, some trades or some charts, some price action has slightly different intricacies. Like the FX market or the futures might trade slightly different to what you see on stocks, but your general price structure holds true across the board. All right, and it's across time frames too. So you got your lower high in here. If that didn't get up through there, the market's not strong enough. We start to get selling come in. You can drop it down charts to see what happened at that stage, and then you got another lower high in here. Okay, that market looks like to me it's going to roll over. Key levels through here, and you can see when you know your key levels, you get that acceleration lower. So we're not the only ones that can see that key level. So we've got another lower high, major lower high, pushed out through that low here, but it really wasn't that far. Then you've got that little pickup. the thing is, it's washed out that high at $1.10. So that previous high off this level, actually, this is probably another one you had a. I don't mind that little setup there. That's probably on the weekly. See what it says on the daily. Just through here, you can see what I'm talking about from that weekly. It's that zone here, through 60. Off this, and this, the time it spends building those two, you've got to take into account. All right, so you get that sharp push down here, a sharp rebound or reaction off that support, and it's only really reaction when it pushed through that low. It reacted quite strongly, and then if this was a weak market, should have gone through that low, and it didn't. You can see, okay, sellers were coming in, and it was edging lower, but buyers were soaking it up at slightly lower prices, but overall it's holding potentially a higher low. So you could have bought it just with a breakthrough there, and this is in hindsight. It's so easy to trade in hindsight. But when it's popped up and retested that high, okay, sellers have gone, okay, let's jump in again. It's going to go through 40 cents, 35. It's going to go down to 20 cents. I'm going to get out. And instead, it just started getting held up here as well. And I think that was at this stage here. Yep, at this stage here, and it started getting bought up again. So if you're a buyer, take into context what's happening on the weekly chart. That was a great little entry. You can just work an entry. It's probably a bit harder. Not quite as clean, maybe just through here, even through, this level here, you might have to give up a bit, but your risk is quite tight, and then you've got acceleration higher. Pull back, push up, pull back, push up, and then, this one here, you might have, look, your key level's way down here, which is not nice when you give up so much, but ideally, if you got that push up here and you're looking at this stage, strong sell-off, started going back up, I might have moved my stop just below $1, and got stopped out there, but locked in some healthy gains. So at this stage here, market's going down, no doubt about it. It's extended to the downside, and it's starting to get extended into some support zones at 30 cents. But really, it's got a lot of work to do before anything starts happening. You want to see, on a weekly basis, potentially something like that. You want to see a sharp reaction higher off that support. You want to see buyers are stepping in here. Then you want to see potentially a major higher low build. We don't know what's going to happen, but at the moment it's quite strong on the sell side. All right, Paul. Do you want to look at ANN? Yeah, did we discuss this previously? I can't remember there. Now, Ansel, you can see a good reason, why it's in the buy zone is on a weekly chart. It's got a good little zone there at 21. It's touched there, and that's pretty much your anchor. But the only thing, we did mention this, when the market, that's your weekly anchor here. It's pushed up. It's come all the way back down and retested, even washed out those lows. So the fact that it's popped back up, and you can see it's got extended on the upside, it doesn't leave me feeling too comfortable about it. Monday, no worries. It doesn't leave me feeling too comfortable about it because it's extended to the upside, but really sellers are just jumping in there. So for me, I wouldn't want to jump into this. I'd ideally want to see, if I'm looking to buy it, actually, get rid of that. Let's go to the weekly. I'll mark up this weekly again, just quickly. What happened here? Stretch that out a bit so you can see, just to get an idea, just start seeing, is that trend broken? Okay, this is not looking healthy really at all. I don't know if anyone's long this or short this. Just looking purely at that weekly, this is ideally your anchor level. All right, and you can see that support's holding. It's had that good acceleration higher. That looks nice. Problem is, it's come all the way back down, popped back up, and then sold straight through really that anchor level, $18. It has lifted off there, but the market's got all the room, all the room in the world, really contract higher, make a major, potentially we could be in the midst of making a major lower high and then rolling over. If we start pushing down through 21, this really does, to me, confirms a major lower high in context to this high, which means it's going to really start to, gear up for a move straight down through 15. All right. The only thing working for me, really working in its favor on the weekly basis, it's got extended to the downside. And then it's reacted off 21. But then just remembering what was happening on the daily chart, we may, if I can draw that up, this is on the weekly, we push down, just washed it out, and we're at that stage there. So we could easily, you know, drag in a few buys, work our way high, and then bang, straight down. So you just got to be wary, because it's always in. This is a weekly. That's our weekly support zone. So the weekly highs up here. If we're contracting within that high, you know, below that high, that's got enough emphasis. That means it can contract higher. You know, stochastics, you know, getting bought up, but it's getting soaked up. More sellers are starting to jump into those slightly higher prices, and then away we go. Nice little sound effects there too. So this has got me concerned just from this weekly. Nothing's confirmed either way. And then just going back to the daily chart, you know, drilling it down just to see what's happening on the daily. The fact that it's, you know, has reacted off 21 on the weekly and the daily. It's reacted off 21, and it's extended to the upside. You know, in context of this high up at 25.50, which remember on the weekly is a lower high. Potential we're going to turn out to be a lower high than, say, 30, wherever it is. Yeah, about 30. This market it could easily from here just completely collapse through 21. So it doesn't leave me confident either way. If we just draw up, just go back to my weekly, and that there, you know, just remembering. So you got that trend up. Okay, it was broken at this stage, and then we've got that reaction back up. It's just starting to get broken again, and you can see where we've gone on the daily too. We're pretty much right up there on the daily. So yeah, I wouldn't be going anywhere near this just at the moment to buy. And if I was long, I'd probably be just trying to query where I'm long from. If I'm locked into profit, I might just want to, you know, tighten the stops up, just so you don't lock in a loss, and just see what happens. All right, hope all that made sense, guys. Yeah, no, I just saw your comment there, Nando, sorry. Yeah, you can see the difference in that. Ideally, you want to trade. You don't want to be trading. You don't want to sit on the, we call it, I guess you can call it sitting on the bid. Sitting on the bid, just going and putting a buy price, say, at a support zone. I'll just go in there, I'll just jump in there, I'll go and buy it at that zone. It can be, for me, you're not, because when it's coming down into that support zone, it's not strength, it's weakness. Generally, it's weakness if you're buying on a support zone. So you can see those two trades there, even though they're coming into a major support zone. You know, I ideally wouldn't want to go near it. Okay, does that make sense? So yeah, what you want to be doing is always buying into strength, and that's what we're trying to do with, and that's, you know, the last stage of any trade is the setup, and what you're trying to do is really buying into strength with that setup. I'm just trying to think of an example. Well, maybe CKF, not the greatest example just at the moment, but you can see that's contracted lower, started to hold some high lows, took out some minor lower highs just in here with that move up. It got sold off, but what we're aiming to do is buy into strength. So this is starting to, you know, show the goods or produce the goods that it's actually, that's the zone we want to buy. And the buyers, I'm not the only buyer starting to step in there. There's maybe other buyers seeing that as a good pullback area. It's pulled back enough, contracted off the highs, and that potentially is a good zone to take us up. So we want to be buying into strength rather than buying when into weakness, because you're buying into weakness. If you've got big pockets, fine. You keep buying, averaging down on the way down. But for me, it's not the idea. You prefer to average up. You know, if you're going to buy a big position, buy it at different stages when you're seeing signs of strength rather than just sitting on the bid and buying into weakness. And I think those stocks you mentioned were quite weak, really. DRM, LAA, LA. Anyway, hope that's helpful, guys. Any more questions? Yeah, just whack them through. I'm going to knock it on the head there. We'll finish up. And we'll be back in on, Monday? Back into the fray on Monday. Just seeing where these stocks are while I'm waiting. Yeah, so, just be prepared on Monday. We'll go through the same type of structure. We'll just chat about the market at the start. See what your thoughts are. Now, like we've done before with Paul, if anyone's got anything at all, any trades, you know, we're just trying to get that competition. John, Nando, anyone that wants to just put in some trades they've got going, or, you know, and we'll just have a bit of a chat about them. I might bring up something on Monday too. I mean, all our trades are pretty much there anyway. We've only got, I think, 3 positions at the moment, if I'm right, which is, well, that's not it. We've got Coke, which is still holding up. We've got a dividend on that, so we're actually up on that. We're up on price, so we've got it at 10.36, half a cent below. but we've got a 25-cent div there. That's good. CKF, we're in that one. Down a few cents on that, but that's still starting to show some good signs. And WBC, which we're up from 32.50, so that's looking great. Yeah, I reckon it's a great idea, just chucking in all the talking about some trades, create that little bit of competition. Legend Paul, thanks very much, mate. I'll even show you, I might have some SPY trades or anything I've done in the past, just to show them and explain about them. There's a few losses in there, so it might be good just to go through. Yeah, have a bit of a chat on Monday, and we'll go from there. But yeah, feel free to send in some charts to support@tradesetups.com.au. And if you did enjoy what you heard, just the usual, just give us a like. That'd be great, much appreciated. And feel free to pass the stream on to friends that might be interested in the market. So, all right, guys, thanks for joining me, and I look forward to speaking to you again on Monday. See you later. Bye.